seismic shift is happening right now in North America, one that could redefine global economic power. Canada, long seen as a secondary player in trade and energy, is now taking center stage. With massive investments in infrastructure, energy, and mining, Canada is rewriting the rules of international trade and reducing its reliance on the United States. But what does this mean for the future of the U.S.-Canada relationship? And could this shift permanently alter America's dominance in the region? This is a major economic transformation unfolding before our eyes, and if you think it won't impact global markets, think again. Before we dive into this groundbreaking shift, make sure to subscribe and turn on notifications so you never miss updates on the latest economic trends, global power shifts, and financial strategies. Now let's break down this economic revolution, how Canada is taking control of its destiny, and what this means for the future of North American trade. Canada is building a trade empire independent of the U.S. For decades, Canada has been deeply integrated into U.S. trade networks, relying heavily on American ports and infrastructure to export its resources. But times are changing. Major investments in Canadian ports and transportation networks are opening direct pathways to Europe and Asia, reducing the country's dependence on U.S. trade routes. What does this mean in practical terms? 1. Massive port expansions. Key ports such as Vancouver, Prince Rupert, and Halifax are receiving billions in upgrades, allowing for faster, more efficient global shipping. 2. Pipeline expansions. Canada is investing in pipelines that connect directly to domestic refineries, cutting out U.S. middlemen. 3. $41 billion in transportation infrastructure. The government is pouring money into highways, railways, and logistics hubs to streamline trade. Impact. By bypassing U.S. trade channels, Canada gains more economic independence, allowing it to negotiate better deals with international partners while avoiding American-imposed tariffs. The U.S. tried to maintain control over Canadian exports through trade tariffs, but instead it backfired, pushing Canada towards economic autonomy faster than anyone expected. The big question: will Canada's energy shift force the U.S. to rethink its own energy policies? The world's shift to electric vehicles has put Canada in the driver's seat. With the electric vehicle, EV revolution in full swing, the demand for critical minerals like lithium, nickel, and cobalt is skyrocketing. Until recently, China dominated the global supply of these materials, but Canada is stepping up in a big way. Key developments: massive lithium and cobalt mining investments. Canada is scaling up domestic production, ensuring a steady supply of key EV components. Reduced dependence on China. Automakers like Tesla and Ford are looking to Canada instead of relying on Chinese suppliers. Government incentives, billions in funding, are being allocated to boost domestic mining and refining industries. What does this mean for global markets? 1. Canada is becoming a top supplier in the global EV supply chain. 2. It's reducing China's economic leverage over the auto industry. 3. The U.S. will have to compete for access to these resources, potentially driving up costs for American automakers. The U.S. used to have leverage over Canada's mining industry. Now Canada is the one calling the shots. Canada is rewriting its trade alliances, and the United States is losing its grip. For decades, Canada has been tied to the U.S. through NAFTA and other trade agreements. But as tensions rise, Canada is looking east, towards Europe and Asia, for new economic partners. LNG deal with Shell Canada is supplying Asian markets directly. Stronger European ties. The European Union is now investing in Canadian energy and technology. Diversified exports. Canada is reducing U.S. trade reliance by expanding into other global markets. The big impact. If Canada proves it can thrive without U.S. trade dominance, other nations may follow suit. The U.S. risks losing influence over a key ally and economic partner. A shift in trade could cost the U.S. billions in lost revenue. Could this be the beginning of a broader global trend where nations move away from U.S.-centric trade policies? Tariffs, boycotts, and retaliatory policies could escalate into a full-blown trade war. Recent tensions include tariffs on Canadian imports. The U.S. imposed a 25% tax on Canadian goods, pushing Canada to retaliate. Boycott of U.S. products. Canadian consumers are ditching American-made goods, hitting industries like alcohol and tourism. Declining U.S. tourism. Canadian travelers are avoiding U.S. destinations, costing states like Florida and California billions in lost revenue. If these economic tensions continue, We could see higher consumer prices, reduced cross-border investments, the potential collapse of long-standing trade agreements. Is the U.S. prepared for a Canada that no longer relies on its economy? This is just the beginning of a larger economic power shift that could alter North America forever. The transformation we're witnessing is not just about Canada, it's about the future of global trade. Will Canada's bold moves force the U.S. to rethink its policies? Or will we see increasing economic tensions between these two neighbors? Imagine waking up to find that your country's largest trading partner has imposed hefty tariffs on nearly all your exports. This is the reality Canada faces as the United States under President Donald Trump.
Mexico and Canada, because they're allowing vast numbers of people. Canada's a very bad abuser also. Vast numbers of people to come in and fentanyl to come in.
This is not just a trade dispute. It's a pivotal moment that could reshape North America's economic landscape. Before we delve into Canada's bold strategies to counteract these challenges, make sure to subscribe and turn on notifications. Stay informed about the latest developments in global trade, economic policies, and international relations. Now let's explore how Canada is navigating this complex economic terrain and what it means for the future. The United States has been very bad to us on trade, but now Canada is going to have to start paying up. Early February 2025, President Trump announced a sweeping 25% tariff on all Canadian imports, excluding energy products, which would face a 10% tariff. This aggressive move aims to pressure Canada into addressing U.S. concerns over illegal immigration and drug trafficking, particularly fentanyl. Canada's immediate response.
We heard and saw President Trump's latest comment. We wanted to say to Canadians that, again, we have a plan.
U.S. goods targeting products such as liquor, vegetables, clothing, and household appliances. These measures are designed to exert economic pressure on key U.S. industries. Provincial actions. Ontario Premier Doug Ford escalated the situation by proposing a ban on American-made alcoholic beverages and threatening to cut electricity exports to U.S. states like Michigan and New York. Such actions could leave approximately 1.5 million Americans without power, highlighting the interconnectedness of North American energy grids. Economic implications. The imposition of these tariffs could have far-reaching consequences. Supply chain disruptions. Industries on both sides of the border, particularly automotive and agriculture, could face significant challenges due to increased costs and disrupted supply chains. Consumer impact. Consumers may experience higher prices on everyday goods, from groceries to household items, as businesses adjust to the new tariffs. Market volatility. Financial markets may react negatively to the uncertainty, affecting investments and economic growth prospects. In response to these challenges, Canada is proactively redefining its economic strategies. Diversifying trade partnerships beyond the U.S. market. Historically, approximately 80% of Canadian exports have been destined for the U.S. market. This heavy reliance has made Canada vulnerable to U.S. policy shifts. New alliances. Asia-Pacific engagement. Canada is strengthening ties with Asian economies. The completion of the Trans Mountain Pipeline expansion in May 2024 has tripled oil pipeline capacity to 890,000 barrels per day, facilitating increased energy exports to Asian markets. European connections. Ongoing negotiations aim to enhance trade relations with European nations, providing Canadian businesses with alternative markets and reducing dependence on the U.S. Energy independence and innovation. Reducing U.S. dependency. Canada is leveraging its vast natural resources to achieve greater energy autonomy. Pipeline expansion. The Trans Mountain Pipeline now enables Canadian oil to reach global markets without transiting through the U.S., reducing exposure to American tariffs and political pressures. Renewable energy investments. Significant investments in renewable energy projects, including wind and solar, are underway. These initiatives aim to diversify Canada's energy portfolio and promote environmental sustainability. Industry adaptations. Companies like Suncor Energy are adjusting their operations to mitigate tariff impacts. By refining a substantial portion of their production domestically and utilizing the Trans Mountain Pipeline for exports, Suncor is less exposed to U.S. market fluctuations. National unity and identity. Domestic solidarity. The tariff threats have sparked a surge of patriotism across Canada. Canada is Not for Sale campaign, initiated by Ontario Premier Doug Ford, This movement emphasizes national pride and resilience. Merchandise bearing the slogan has become a symbol of unity against external economic pressures. Political cohesion. Despite regional differences, there is a concerted effort among federal and provincial leaders to present a united front in trade negotiations and retaliatory measures. The path forward, challenges and opportunities. While Canada's strategies demonstrate resilience, several challenges and opportunities lie ahead. Challenges: economic adjustments. Transitioning to new markets and energy infrastructures requires time and investment. Short-term economic disruptions are likely as businesses adapt. Political dynamics. Internal political disagreements, such as Alberta Premier Danielle Smith's reluctance to endorse certain retaliatory measures, highlight the complexities of achieving national consensus. Opportunities: strengthened global presence. By diversifying trade and energy partnerships, Canada positions itself as a more robust player in the global economy. Innovation and sustainability. Investments in renewable energy and technology can drive innovation, leading to sustainable economic growth and environmental benefits. Canada's response to U.S. tariffs is more than a defensive maneuver. It's a strategic overhaul with global implications. As Canada navigates this transformative period, the outcomes will not only redefine its economic landscape, but also influence international trade dynamics. Will these strategies lead to a more self-reliant and globally integrated Canada? How will the U.S. respond to Canada's assertive measures? Imagine a nation standing at the crossroads of economic adversity and opportunity. Faced with unprecedented tariffs from its largest trading partner, Canada is not just weathering the storm but transforming it into a catalyst for economic reinvention. How is Canada turning these challenges into a blueprint for resilience and growth? This is more than a trade dispute. It's a testament to a nation's resolve to redefine its economic future.